My mission is to find a cure for Duchenne muscular dystrophy, no matter what it takes.
Hello and welcome to the H.O.P.E. Show. I'm Jim Raffone, your host. Inspired by Jamesy, powered by Adapting Social, and sponsored by All American Ford. Today, our guest is Matt. Good afternoon, Matt. How are you?
I am excellent, sir. Thank you for having me.
Dude, it's great to have you. Just so everybody knows, I met Matt a couple of months ago through the Brick Latip group, which is a phenomenal group. If you're in Monmouth or Ocean County, you should come down to the Brick Latip group and meet a whole great bunch of people for some networking. But besides that little plug, let's talk about Matt. And Matt, tell us a little bit about yourself.
Oh, well, my name's Matthew Victoria. I am what I would call a creative financial specialist. Right? So what does that mean? I'm actually a mortgage guy.
Okay.
A little bit more than that, I'd like to think. And I just started change companies. I'm with PRMG. So they're out of California. And our tagline is Got Mortgages. Mm-hmm. So you'll see that around a lot. And for me, it's just a lot of fun. So I've been doing this now since 2012.
That's a long time.
It's been a little bit.
So you wrote a few mortgages?
A couple. This is my third life.
Okay.
So I've reinvented myself twice already. So
you weren't in the business back in the day, and I wonder if you would know this, if the loan still exists, the coffee loan?
Coffee loan?
Have you heard? See, you don't have a
Like you have a loan over a coffee?
No. So it was actually called a coffee loan, and I guess because you paid pennies up front like you would for a coffee and then a boatload of money on the back end. And I guess at the time, and I don't want to say which party was in office at the time, but they were trying to get people with subpar credit and subpar income into a new home.
You talking about coming into 08?
Yeah, right before 08, like 05
right.
or 6 or 7. Yeah, which caused probably that 08 housing
Well,
crisis.
we had another term. It was called a ninja loan. No income, no job applicant.
Wow, might have been it.
Well, might have been. Like the Big Short stuff.
Right.
Yeah, that actually did happen back then.
Right.
I came in a little after that. So I came in the, when the dust was kind of settling after all of that.
Yeah, thank God, because you don't want to be tied to, unfortunately, any bad loans that might have been written back then, because that just caused a whole ton of nonsense for the economy and for people. Unfortunately, lost their homes.
Yeah.
Tons and tons of people lost their home. I came close because the economy just tanked at the time, and then unfortunately, as we all know, September 13, 2013 hit, and our course changed forever when Jamesy was diagnosed with Duchenne muscular dystrophy. But we'll get to that. We'll get back to that. But so you've been in the business since 2012, 13 years.
Yep.
Wow. And what have you seen over the years?
It's interesting because I deal with people from all different types of walks of life. So, people with crappy credit, people that don't make any money, people that make money but don't want to show it to any place, especially Uncle Sam, divorce situations, people coming out of foreclosures. So it runs the gamut from like the good all the way down to like to the not so good that we kind of have to try and still help them and figure out solutions.
Right. So it sounds like you're trying to put together on both ends of the spectrum because, as you mentioned, those who have money don't want to show the money that they have. But so what do you do in that situation when someone, and in this economy, it's not odd to think that everybody's buying $1 million home. Probably a higher percentage of your clients are buying $1 million or better.
Well, it used to be where the first-time home buyer was like a $250,000 house.
Right.
10 years ago.
Mm-hmm.
Now, the first-time home buyer is a minimum, I'd say, of like 350 plus, depending on where your areas are.
Right.
So it's definitely changed. I don't know how people are making a lot more money because I don't really see it. So it's definitely gotten a lot more challenging for people too. So
that's where you got to be creative,
yes.
Right? Because I remember when I first got into the market, and I'm going to date myself, my first initial home was $157,000.
Yeah.
That same home is going for over $500,000 now,
mm-hmm.
which is insane because I can't imagine my daughters at 25, 26, when I started looking at homes, to buy that same house. Where are they making the money when you get entry-level jobs, right? Coming out of college, a few years after college, who's going to be able to afford a home at $500,000? And that's only a 3-bedroom home.
Well, and it's funny because now the mindset is, well, I'm going to wait for rates to come down because then I'll buy. Right? And it's funny because Matt Smith, the new person in our chapter, his daughter is thinking about buying a house and upsizing.
Okay.
And he told her, he said, well, why are you going to do that? The rates are high. He's like, why don't you wait? I said, but if you wait, you do realize that next year that same house is going to be 10% higher or more, depending on the market, 10% higher.
And then you need the rates to come down even more so if you think to try and level out that playing field, right?
Well, and once they come down, you know what's going to happen? We're going to be back to a COVID market where now all of those people that have been sitting on the sidelines are now going to come out, and it's going to be back to bidding wars again. What's that going to do? Drive the prices up again.
Right. That's crazy. So in something like that, what do you recommend that she do? You know, and then
Buy
you're
now.
going against her dad, right? Which
Buy
is
now.
tough.
No, he understood it after I
understood.
explained that
Yeah.
because it's the math.
Right.
You know, math numbers don't lie. That's why I was explaining to people. The math doesn't lie. Buy now, refinance later because you'll have more equity in your house. The rates will come down, but at least, I'm sure you dealt with flippers before, right?
Sure.
Right. So the flippers always say you make money when you buy your house. You don't make it when you sell the house. You make it when you buy the house. Well, it's the same thing. If you buy now, you secure your equity position moving forward.
Right.
But at least you got it now, and then next year that house will be worth 10% or more higher. You know, I bought my house at $575 4 years ago. It's now worth $8.
Wow.
So that's where it's going. Pre-COVID, it was 3 to 5% was the average rate of appreciation. You were in the real estate business.
Yeah.
Would that be a fair assessment?
Sure.
Right. Now you're 10 to 20%.
No kidding.
Yeah.
Yeah, see, I got my blinders on. I'm so focused in the Duchenne space that and that's one of the things I want to talk to you about is I miss those opportunities, which I believe are still out there because years ago, as you mentioned, Flipper, before my son and I was into Jar of Hope, I was continually in the construction environment. So we would buy a house, fix it up, sell it when let's just say the season wasn't there, when we weren't doing concrete, right? So we would do it in the slower months, which was great for cash flow. It was great for a lot of different reasons, right? So are those opportunities still out there now? And if so, what's the price value to get into a house that you want to fix up and sell?
So they are out there. They're farther and fewer in between because once HGTV came out, it kind of put all that in the forefront for people. So now flipping became the big thing.
Right.
So it's harder. I'm not saying it's impossible. It's still a little harder. You just have to look for them.
Right.
You know, so the hard part for people is they want to go directly from like 0 to 100, and you kind of have to start out small, finding somebody to maybe do it. And doing residential mortgages, I deal with this stuff because I deal with investors a lot. So some people buy a house to flip, and then they turn around and say, you know what? I want to keep this as a rental because that becomes now a passive income opportunity.
Absolutely.
You know, so I have somebody with flipping. It's much different, the financing, than it is for purchases and holds. So I have one guy that actually is going to be buying a flip. He's doing it with a DSCR loan, right? So a DSCR loan, right, stands for debt service coverage ratio, right?
Okay.
So when you do a regular mortgage,
So what does that mean for those?
explain it to you.
Yeah, okay.
I'm going to explain it to everybody out there in YouTube land too.
Yeah.
So when you buy a house, you're using traditional more income, taxes, W-2s, things like that. So when you're buying something with what we call a DSCR, it stands for debt service coverage ratio. It's for investors. It allows you to buy a house in an LLC, which you can't do with conventional financing. Right? You have to buy it under your name and then turn it into an LLC afterwards. And instead of it being traditional income, the rent becomes the income on the property.
Love that.
So we don't collect any personal income documentation from you. It's all done based off the rent. And then somebody says, well, how do I show the rent? Very easy. When we have the appraisal, the appraiser actually does a market rental analysis, and that comes back with the rent that we have.
Love this.
So I have a guy who's a flipper. What he's doing is flipping's expensive. They hit you with a lot of fees when you go to flip, and then the interest rates are higher, and they're short-term loans. They're 12-month loans. What he's doing is he's actually buying one with a DSCR loan. He's going to hold it for 6+ months, and then he's using that, and then he's just fixing the house, and then he's going to sell it.
And what does he do with the money to fix the home? Is he pulling it out of the equity that potentially?
No, he has the money because we actually just did a cash out refinance on a property that he owned outright,
Another
free
one.
and clear, which, by the way, free and clear properties, not a good use of your money.
Free and clear, not
Right.
a good use. True, because you're sitting on all that equity.
Right.
Am I right?
Think of it like the house is a concrete piggy bank.
Right.
You can't take anything out of the piggy bank. So you pull it out and you use it. So now what he's doing is he's using, it's only 20% down payment. 20% here, 20% here, 20% here. Now it all adds up.
And is he using that or pulling it out as a line of credit? How is he doing a refinance?
Yeah, he pulls it out. Nobody really wants to do lines of credit on investment properties. It's too risky for people.
Is it?
So yeah, it's also a lot more expensive.
Okay.
Right? So, and there are also a lot more limitations on it. So if you own a property, we can actually pull out up to 75% of that property's value.
So I'm not sure if I understand. So let's backtrack. So say I'm going to use me as a real life example. I own a home. It's got equity in it. Say I want to take out $100,000 because I want to buy a property.
I'll give you a scenario like he had.
Okay.
He owned a place. It was worth $200,000.
Okay.
He gets to pull out 75%. That's 150 grand. He now takes 150 grand. Most people would say, "Oh, I'm going to go buy a property for 150 grand." Right? So how many do you get? One. But if you do 20%, 20%, 20%, now you have 3.
Okay, but now conversely, you're looking at 3 mortgages you're responsible for, right?
You're looking at 3 mortgages that you're responsible for, but if you're renting those properties, the rent pays the mortgage.
So that's the
DSCR.
loan. That's fantastic.
Isn't it?
Interesting. We might have to. Anybody out there want to partner on something like this? This is wonderful.
And that's why I love it so much, because they're easy to do, because there's not a lot involved with it. It's just about knowing what you're doing and how to do them. We can do these in 2 to 3 weeks.
No kidding. Interesting.
And literally for a purchase transaction, I need a driver's license, I need your LLC documents, and it doesn't even have to be a seasoned LLC. You could open it right now.
No kidding.
Yeah, because a lot of people think that it needs to be seasoned like 2 years, 3 years, 4 years. No, it doesn't have to.
Where have you been my whole life?
I'm right here, buddy.
This
See?
is great. The good Lord has brought us together. We have to make some moves in order to feed Jar of Hope then, because we can use the income and donate it to Jar of Hope to help these terminally ill children suffering from Duchenne muscular dystrophy, right? The good Lord, when you ask, he provides.
So that's why for me, I was originally a mechanic.
Auto mechanic?
Auto and construction equipment.
Okay.
So I went to Lincoln Tech and I actually graduated there.
We're alumni.
See, look at that.
Holy cow. What year?
93.
Stop it. I was in 92, so I just missed you.
Yeah, see, look at that.
Wow.
So, and then the year after I graduated, I went for automotive.
Okay.
And
I went for HVAC.
Okay. So the year after they started a program with Ford, I would have actually wound up working for Ford, but it was short. So I wound up going to work for American Equipment in Piscataway, and then they wound up becoming bought by United Rental.
Okay.
Which you probably heard of.
I do.
They were
rented
big.
Tons of equipment from them.
So I worked out at a Burlington shop, and I had a road truck. It was a dually F Super Duty.
Oh my God, no kidding.
Yeah, box truck. So I used to drive that around. You familiar with Palisades Mall?
Sure.
I lived up at that place when they were building it. So I used to go and walk around and fix all the equipment for the tin knockers, the electricians, and everybody else.
Right.
So I lived up at that place.
Fantastic.
So being out there on my own, I actually had to fix stuff on my own without the help of anybody in a shop. Sure. So it kind of sharpened my scientific method skills, my problem-solving ability.
There you go.
Which I think a lot of people lack nowadays.
100%.
Because the phone just, hey Siri, how do I do this? Well, we didn't have, hey Siri, how do I do this? Right. It was, hey Matt, how do I do this? And I had to figure it out in my head.
Looking in a mirror.
Yeah.
Right.
So I would have to do it all out there. So I think that kind of prepared me for what I do now, because now I'm a problem solver. Like a lot of people think it's about interest rate, and the interest rate is really the farthest thing the last thing we worry about. The rest of it is, like the first part of it is, well, how do we do this? Like, are you doing this on your own? Is there a co-borrower? Do you have the income? Does your overtime work? You know, does all of these other things line up? What's your credit look like? Right. So these are all the first kind of components to it. And everybody has been trained, what's the rate? What's the rate? What's the rate?
Yeah.
Well, I don't know yet. Why don't we see if we can actually do something for you first? Then we'll figure out what the rate is. And we'll get you the best rate that we can based upon your criteria.
Right.
Because interest rates, mortgage rates are risk-based.
Right.
Risk. Yeah.
And the risk is on the person who's taking out the loan.
Correct.
Right.
We look at your credit, we look at your income, we look at your character, like how you pay your bills and things like that. Like that's important.
Right. Yeah. And what is the current interest rate?
It could vary anywhere between 5.9 to 6.9, depending on what you look like.
Right. Okay. But it's not the 3% like it was a couple of years ago, right? Which, or 2.5%, which is basically free money. And
2.25% for me. That's what my interest is on my loan
God
when I
bless.
bought my house.
That's amazing.
Yeah.
I wish so would you have encouraged, and at the time when I bought the house, I should immediately taken out a HELOC or something to have, because that was free money.
If you had the equity then, but you can take out a HELOC now and just not use it, because your house is probably worth a lot more now than it was back then.
True.
So you'll get a bigger HELOC now. You know, in a HELOC, you only pay what you use.
Interesting. Okay. And then what's the HELOC rate based on? Is it rate based on prime plus 1?
Prime plus whatever, depending on your criteria is. It could be anywhere between 0.5 to 2.
2%.
So I think prime right now is somewhere in the high 6s.
Yeah, so you're looking at 8%.
Yeah, could be. If you use it though.
If you so say 8% on 100,000 is what? Is that 800 a month?
800 a year.
800 a year. Oh, it's based on an annual interest rate.
Yeah. But like I said, if you're not pulling it out and using it, then it is what it is. Like mortgage interest is fixed. So like when you see the Fed rate goes down, that doesn't affect mortgage rates. That affects Fed rate, prime rate. So it'll affect credit cards, which are high enough as it is anyway.
Right.
You know, it affects HELOCs, it affects car loans and things like that. We run off of the 10-year Treasury.
So taking a HELOC, would that be good to pay down credit card debt?
It would be, because you're paying 9% versus 30%. The only thing you can't do is you can't actually write that off on your tax returns.
Like you can on credit
You can't
card
write.
debt?
No, you can't write off the interest on a HELOC on your taxes.
Right.
You can write off regular mortgage interest on your primary or first mortgage. You can't write off second. Not unless you use it for renovations. They changed that in the Tax Act of 2018.
See that? That's why we got the professionals here. Good stuff. So let me ask you, the DSCR,
Yeah.
can you use that on international properties?
No.
Damn. Okay.
Yeah.
So what I'm looking to do at Jar of Hope is kind of find I don't want to say a resort because we don't have that kind of money, but a place that we can set up where families can go and take some respite time with their child. You know, people don't understand to some degree, right? They look at my son and they go, oh my God, James, he looks great. He doesn't look sick. And thank God, no, he doesn't, because of all of our supporters out there and all the effort that we put into him. Like, he's literally going to be the initial $6 million man, if you remember that show back in the day. He's going to be the guy, right? Because we're putting...
How old is he now?
He's 16.
Okay.
Right? And typically by definition of Duchenne muscular dystrophy, children at 16 years old should be quadriplegics, should be living on basically life support or event to help sustain life. And he is nowhere near that.
That's great.
It's amazing, right? He is a miracle, and I thank God for giving me the tools and the network, like someone like yourself and other people in the last 12 years that's crossed our paths to help me keep him alive. And we're trying to get this protocol that we're doing with him out to other children. And what I foresee is a place, I would love to develop a place where we can have families come together and just have a pool, have just, it's like a sanctuary where they don't have to worry about bills, they don't have to worry about paying for a vacation, because when you have a sick child, one, divorce runs rampant in this community. So there's a lot of single moms who can barely afford to keep things together. And I don't mean this in any disrespect, it's just what it is. And then to worry, the grief about worrying about their child every single day, how are they supposed to take that child away?
I think there's two things that affects the divorce rate. One is finances, and the other is when you have a sick child or a loss of a child or something like that. People don't know how to kind of cope with it,
right,
and work together as a team.
Yeah,
and that's so important nowadays, is working together when you have things like this.
100%.
Yeah.
Right. So that stress sometimes creates a wedge, right? And what I want to do is be able to offer these families a place to go. And purchase something. Can we use a DSCR for that?
You can't, but I think you showed me a property, and it's actually something you could do under your nonprofit. So it's something that you could do.
Okay, we got to talk more about this.
There's different, you have residential and then you have commercial. So what you want to do is going to be done under the nonprofit, so that falls into the commercial category.
Okay.
Which is still doable.
Right.
It's just a different set of criteria.
Well, what if I just did it under myself then? Because
Could.
my personal life, my personal savings has gone all into Jar of Hope anyway.
Yeah.
So,
You could. You just have to buy a property that can show enough rent to be able to cover the mortgage payment. Mm-hmm. And then at that point, you can do whatever you want after you close on it.
fantastic.
Yeah.
I love it. We're speaking with Matt Victoria. Matt is a mortgage guy. We got mortgages? Is that what you're saying is?
Yep.
Right? And,
PRMG. We got mortgages with a question mark.
and how do they get in touch with you?
You can find me anywhere if you look for Matt Your Mortgage Guy. I'm on Facebook, Instagram. My cell is the easiest thing to do.
Okay.
That's 908-296-8904. We do residential, so purchases, if you want to live in it, you want to renovate it, you want to buy investment properties, you can't show income, you're self-employed. Deal with a lot of people that are self-employed. They need a little help nowadays just because it's the guidelines tightened up so much for people. Mm-hmm. It's hard, A lot of people don't show what they make on their tax returns because they're going to get clobbered.
Right.
So we have specific loans that actually help people that are self-employed. I can even do loans with no income at all. I have a whole plethora of things that I can do
No
for
income
people.
verification.
Yes.
Do you pay more for those loans?
Yes.
Okay.
But let's say you have a business that you're taking in a lot of cash, or you don't have income at all right now, and we can actually do something like that. So I had a divorcee that I actually helped. She wound up getting a buyout from her ex. She didn't make enough money to get to where she wanted to be to live. She wanted to live in brick. You are not touching anything in brick for under $475 at a bare minimum.
Right.
She didn't want to take her kids out of school. So we wound up doing a loan for her, 25% down, no income, verification at all, and she's in brick. Now we're going to come in and do a refinance on her because she now has somebody to put on the loan with her.
That's awesome.
Got her to where she wanted to be.
So it's a benefit for working with you. You're creative, you got the experience to get people to where they want to go without conventional loans,
Yes.
which is awesome.
I try to be very well versed. A little law, a little tax, a little financial advisor. I'm none of those, but I try to think like they do.
Right.
So when I try to apply that to the people I work with.
But you don't function alone, right? Like you have a team around you, I would imagine, that you work with between a realtor, title person, attorney, right?
Yes. My title person that I work with, I call her my work wife because we talk so much.
Okay.
And
who's that?
That's Marianne LaGuardia from Clear to Close.
Okay.
Yeah. And then we have attorneys that are great. I have a bankruptcy attorney I work with, divorce attorney, real estate attorney. You need all these people because you need a team when you're doing these kinds of things.
Right.
Nobody can get anything done in the magnitude that we try to do it without a team.
And who would you say is the quarterback of this team? Is it the realtor? Is it the
Depending
mortgage
on
guy?
what it is, it's usually me. But if it's a purchase transaction, then it's a realtor. If it's a refinance, there's no realtor involved. There's no attorney involved. It's just me and the title person.
Right.
So we kind of do what we have to do.
So there's a title involved in refis.
Yes.
Why is that? And the house already had a title appraisal or title search?
So what happens is when you purchase, you buy a homeowner's policy and then there's a lender's policy. So when you refinance, the lender wants an updated lender's policy. You don't have to buy a new homeowner's policy because you bought that when you purchased the house. You need an updated lender's policy to make sure that it's still unencumbered and there's no liens on it. Like we have to look at all that.
Right. So say you were into the house for 4 years before you do a refi. A lot could go wrong in those 4 years.
Yeah, you never know when maybe the first company missed something. It happens.
Right.
I have somebody right now that's dealing with that. The title company didn't do a very good job. That's why it's important to work with quality people. They didn't do a good job, and he's now dealing with several years later.
Right. So you don't want to go with my Uncle Vinny's got a friend who's going to, he knows somebody, right?
No. Same thing if you're doing a renovation loan. Like I had somebody that just did a renovation loan. She built a second level on her house, and it was about $350,000. Wow. Told her, do not use the cheapest person because they're going to underbid the property, and then you're going to have a problem when they underbid the job. You want to use quality. You get what you pay for.
This is true.
Right? You have speed, you have quality, and you have cost. Pick the two that are most important because you're not having all three.
Right.
If you want it cheap, well, that's different. Your quality is going to suffer.
Right.
So that's why you have to figure out what you want.
So the person that was doing this, I guess, at a level where she was borrowing $350,000.
Yes.
So you came in as the refi.
Yeah, so the way it works, it's called a 203K.
Okay.
So the way it works is you refinance your existing mortgage, and then all of the renovations goes into the new loan. So it's your original loan plus all of the rehab. So her new loan was like $800,000, and we pay the contractor, not her. So most people will try and do work on their house, and they'll put all their money together. Let's say it's $100,000, right? Well, now all they have to work with is $100,000. Well, what if you want $150,000 worth of work? Well, now you have a problem because you're only going to get whatever you can afford to pay for. I now give them a blank check and say, hey, what do you want to do? So what happens is we do an after appraised value. So the actual appraiser actually takes the contractor bid and says, oh, you're now going to have a 5-bedroom, 4-bath house that's 3,500 square feet. Well, this is what it would be worth at that point. So, and then we pay the contractors, not the client. So now the contractors are beholden to get the work done because most contractors usually get money and go finish something else up, and then you have to chase after them.
So true.
Well, this doesn't happen. So it's one of my favorite products that are out there for mortgages.
So you find that the contractors are more, I don't want to say loyal, but conscious of their time,
diligent,
because they know the bank is paying them instead of the homeowner?
Well, yeah, because it also weeds out the fly-by-nights because we actually have to talk to them and make sure they're financially solvent to be able to do it too.
So you vet
yes,
the general contractor or contractors?
yes.
That's fantastic.
Isn't it?
Oh, you guys have got to call Matt. Whoever's out there doing work or looking to do something, you got to call Matt. I love this. I wish I had somebody like you years ago. They were all they were slinging with these low interest rates or interest only loans to get you into something, and then you know what? You never heard from your mortgage guy again.
Yeah.
Which is a shame.
And this person here now, this is now the third refinance I've done for her because we were doing it before and we ran into a bunch of different judgments. So we had to actually fix the judgments first. So back in 08 or...
now, is that through title?
Yes.
Okay.
So she had done a program where they actually helped homeowners that were in trouble with their mortgage. They actually gave them $10,000 or $20,000 or more, it might have been, to actually help get them caught back up on a mortgage. She forgot about it. It came up on title. So
She forgot to what? Make payments?
no, she forgot that it was there.
Okay.
It was forgiven after 10 years, but they never actually removed it from title. So what we had to do is we now had to go and do a regular cash out refinance, take care of some of the other judgments that she had. So then it became a multi-step process. So we did that, right? Then we had to work on our husband's credit as well afterwards to get them ready for this one. And that's what I mean about being a creative financial specialist. Like sometimes you have to do things in steps, especially if somebody just had a bankruptcy, right? Like I can actually do refinances for people that are in a Chapter 13 bankruptcy after 12 months of payments.
Wow.
I can do a refinance and put the bankruptcy trustee balance into a new refinance, get rid of it,
Pay that
and
off.
now they're out of bankruptcy. Then we come back in 2 years later, now do another refinance for them if they need to pull cash out or do things like that. But that comes with the experience and really kind of like getting into it.
No doubt. You could have probably saved a lot of people, a lot of grief in 08.
Back then, that's different.
Yeah.
Different rules back then.
Well, sure, but a lot of people went into bankruptcy. You know, I know the construction industry was in the toilet back then.
What they wound up doing was they wound up doing the subprime loans, right? So they were negative amortization loans. So what happened was they were interest-only loans. So it wound up turning out that they would owe more than what the house was worth.
Right.
So that's where a lot of the problems came from. Now they don't do that because in 2008 and 2011, they did major mortgage reform. So now they changed all of the guidelines. So now you can't get into a house with no money unless you're doing a VA loan, which thank you to all of our veterans out there. It's a benefit that a lot of them that is overlooked because some mortgage people don't want to deal with them.
Wow.
I know people that have actually done FHA loans instead of VAs when they could have done the VA loan. Or USDA loans, which are specific to address and that are actually sponsored by the United States Department of Agriculture. Does not have to be a farm, just has to be USDA eligible.
Wow.
So you can buy with no money down that way too.
God bless you, bro.
You're not going to find them here. You'll go south a little bit. So like you start going towards Lacey or even out west, you'll find them all there. And then you could buy houses out there with no money down.
No kidding. Wow, I love that. Any vine, what do they call them? Wineries?
Well, wineries now commercial.
Oh, is it?
So that's different.
Okay.
So residential is 1 to 4 units, residentially zoned. Mixed use, which would be like a storefront and then apartments over it, that's mixed use.
Okay.
So those start to fall outside of the regular residential territory. But I have outlets for that too.
I love working with people who know their stuff. This is great shit.
I'm a guy that knows people.
Yeah,
you
man.
have to be.
Well, you know your stuff.
Well,
you
that's
know
it.
your stuff. You do. You do. You do. I've spoken with many mortgage people who just go off of what the interest rate is, and we'll see if we can get you. You could pay down the interest rate. Like that's their typical MO.
Well,
right?
when I'm doing things like that too, I also give somebody a choice. I say you can do this, this, or this, depending on what you want. And I give them my educated opinion. And I say, well, this is what I would do. But it's your choice, so you tell me what you want to do.
Right.
You know, do you want to buy it down? Do you want to buy it down more? Do you not want to buy it down? Do you want to take a 15-year versus a 30-year? You know, it all depends. Do I think rates are going to come down? I think we're looking at probably about 2 years, so maybe we'll come into the 5s. That's where I think we're going to wind up going because it's taken a while for our economy to start correcting things. Because they gave out so much money and printed so much money in the last 4 years.
During COVID.
During COVID. They wound up putting out so much money, all the PPP loans and everything else. Well, that affected inflation. Then inflation affects us.
Right.
Because there wasn't a lot of confidence in the market. That's where it comes from. So we kind of just need to get normalized. Like normal rates are somewhere in the 5s. You know, that's normal rates.
All right.
We'll get there again.
That'd be great.
But it's a great time to buy, especially like cash out refinances. If somebody is paying credit card debt, they should look at doing a cash out refinance. They're worried about their 3% interest rate. I'd be more worried about the 30% credit card interest rate that compounds daily.
Right.
Because that'll get you in trouble.
So there's got to be a ceiling or a floor, right? What's the amount of debt that you encourage that kind of refi, cash out refi?
It depends.
Not 10 grand.
No, not 10 grand. But let's say maybe you have a car loan and you have $25,000 left on your car loan. Maybe you got another 20 grand in credit card debt. Maybe you want to do a new roof that's going to cost you $15,000. Well, there you go right there. If you go and do a refinance, and let's say you pull a HELOC, right? Pull a HELOC, you're now going to be paying 9%. So you have a 3% loan and a 9% loan. Do the math. Add them together. Now you're at 12% when you're combined.
Right.
Would you rather that, or would you rather 6.5% 30-year fix that's interest is tax deductible?
That's a tough question because the 9%'s on 50 grand versus, say, well, the medium household or the average house cost these days, say 600,000, 500,000.
Yeah.
Right. So if you're paying 3% on 500,000 and 9% on 50 grand, right? What is that payment at the end of the day versus refining at 6%, which say is the average rate now, 6% on 560?
Well, let's take it one step further. What if now I go and get, let's say your total combined payments are $4,000, right, between the mortgage and between the HELOC. Well, what if my mortgage comes in at $3,500? Is that now worth it?
That would be definitely
Right.
worth it.
So we
Because
have to
you're
look
saving
at
500 plus you're
other
paying everything
numbers
off.
than just the interest rate. And that's what I mean.
Right. Yeah, the total payment at the end of the month. Right.
It's a numbers game. What if, just like if you have somebody wants to put down, 40% on a house, but yet they still have credit card debt and a car loan. I'm like, why would you want to do that? Pay all that stuff off and then put down your 20% and now go invest it someplace in the market that's going to get you a 6 to 8% return.
Right.
Like that's what I mean about being all of these things combined and looking at the whole picture and not just the mortgage.
So you got a realtor you work with?
What's that?
You have a realtor you work with?
I have several that I work with.
Excellent.
Yeah.
We have to find a realtor. We have to sit down and do this DSCR. Did I say that right?
Yes.
Oof. I like this. I like the program. Yeah, buddy. Listen, this sounds great because we have to save Jamesy's life. We have to save other children's lives. We have to save the first child. # save the first child. against Duchenne muscular dystrophy. And if this is an avenue, right, that can bring revenue to Jar of Hope, I'm all in. I'm all in. We got to figure this out.
Or at least get a couple of flips out there, and you can do them under the nonprofit, and bring in some more money to help some more kids.
Yes, without a doubt. This is great. We're sitting down with Matt Victoria. Matt Victoria is a mortgage guy. We got mortgages. Please check out my friend Matt. If you're in the need for a mortgage, a refi, cash out, or DSCR, right? Something new. Rewind this, and then you'll learn all about what the DSCR is all about. This is great conversation, man.
I don't charge for consultations, and I try to give people as much education as I can. And that's important because a lot of people, they got lazy during COVID because they were so busy. So they lost sight of the fact that you still have to talk to people like they're people.
Right.
And you have to make them comfortable. Like one of the things that I do is when I talk to somebody who's a first-time home buyer, right? I say, listen, write down all of your questions that you have. I don't care how stupid or insignificant you think that it is, right? And I tell them, if I don't answer it in our next conversation, which is going to be a numbers conversation and go through all their details, if I don't answer it, I said, I want you to know that it's okay to ask me. Even if you think it's dumb. Right. It's not.
Of course. It's
because some people need permission for that until they tell me, like, oh, thank you. I'm like, it's not stupid. I said, if you want to know it, I don't want you going into something saying, oh, I wish I would have asked that.
Right.
Or I wish you would have talked about this. Well, tell me what you want. Tell me what you need.
Right. Well, you got the experience, right? You've already purchased a home. Have you purchased more than one in your lifetime?
Yes.
There you go. See, so you have plenty of experience on the purchasing side as well as the professional side, which is great. Something a first-time home buyer should take advantage of is
I can tell you that my last one went like that because I had all the right people doing the right things.
Right.
I had everything set up. So for me, that was an easy one. We had an easy seller to work with.
Right.
So that was great. But a lot of people don't understand the value of having the right people on your team.
Right. Very true. You need a good team around you, like Jar of Hope does. Absolutely.
Hey, if you want to go into sports, I mean, if you're going to win a game, you got to have all the right people doing the right things.
Right.
You need the coach, you need the quarterback, you need the captain. Everybody's got to do their job to get to where you want to be. No man is an island unto himself. So
this is true. And what areas do you service?
We're all over, so it doesn't make a difference.
No? Not just Monmouth, not just Ocean County?
No.
All over New Jersey?
New Jersey, Pennsylvania, Florida, California, Illinois.
Nice.
I actually had somebody referred to me in Chicago. I did a loan for them, first-time home buyer.
Yeah? So awesome. So we got to get this realtor. I wish we had a realtor here because one of the biggest things that we do, fundraisers that Jar of Hope hosts annually, is the Walt Disney Marathon Weekend, which actually starts usually the first, second week of January. We've been going down there for 11 years now. And years back, one of my things was we should purchase something down here instead of paying for hotels and whatnot, a big enough space where we can gather a bunch of runners, a pool, again, and keep everybody under one roof, create that team environment because we go down here with over 100 runners every year. Wow. It's a great event. And we're running a 5K, a 10K, a half, and a full in 4 consecutive days. So people are really invested in helping Jar of Hope. And it would be something that we can give back, potentially help people save some money. And then when we're not using it for this weekend, again, it's a respite for a family with a child with Duchenne who perhaps can't afford to go stay at some hotel. I'm not going to mention any hotels down there that are just too, out of their reach, where they can stay and then they can bring their child to the park.
That's nice.
Listen, I firmly believe, and this is why we're here. We are here on this planet to help each other. I am fortunate that I have some God-given abilities to do some things that I can do to raise money for my son and other children alike. Why can't we make it bigger and better? And we've got talent like yourself, right? Because people are always asking me, Jim, how can I get involved? I don't run. Well, listen, you're not a runner. I don't mean you personally. I'm just saying in general, if you're not a runner, what skills do you possess that we can apply to Jar of Hope to help the demographics in which we're trying to help, right?
Well, and like your golf event, right? I was gonna go for the lunch. I don't golf,
Right.
but I do have to say that the event that you did at the Tilling House with all those different restaurants and chefs,
Right.
If anybody has not gone to that, like they need to go because that was just an awesome event.
Well, thank you.
Like we had a really good time, and all of the food was just delicious. It was nice having like a little something from everybody.
Right.
You know, it was a classy event. So anybody, you need to check it out.
Huge shout out to Chef Ryan DiPercio, who chaired that event and really got 20 of the best chefs in New Jersey to come out and cater to our donors, which was just, it was awesome, right? I mean, it was a
Bunch
great
of different things. You had a little seafood, you had some desserts. Somebody had Wagyu beef, one from Australia. You had the pizza person outside. You had a little cow there making meatballs and other stuff. And we actually wound up going there twice afterwards too. So
Awesome.
it was good.
You went upstairs to Ember and Eagle?
What's that?
The restaurant upstairs, Ember and Eagle?
No, we were at Locale because they're in Little Silver.
Gotcha.
Yeah, so we went there and food was really good.
Right.
And the owner's just a really nice guy.
Yeah.
So it was a good time.
Listen, anybody who comes out for free to cook and provide the food for our guests that night, they're all kind-hearted individuals because they know at the end of the day we're trying to raise money for terminally ill children, right? So I would highly recommend going to try any of those restaurants, especially Ember and Eagle. Chef Ryan DiPercio, I can't say enough about him and how he cooks, and just amazing stuff.
Well, and then if anybody wants to do something even just small, right? You have, what is it? The $4.13 a month or something like that. They can do a donation for.
Thank you for bringing that up. Yes, it's called Pennies for Hope because basically you're donating pennies a day, which adds up to $4 a month. And it's a recurring donation, which helps us subsidize doctor visits, right? You'd be surprised, $600 it costs just to send a child who's either autistic or a child with Duchenne to go get an eval at a doctor, especially when they don't have insurance. A lot of these doctors nowadays, they don't take insurance. So we're paying out of pocket for these families. And I'm proud to say, just in the last 3 weeks, we sent 2 families, $1,600 it cost us to send 2 families. And I would do that every day for anybody who needs to go see a doctor, because it's important, right? We need baselines to see in order how do we help a family if we don't have baselines. And that $4 a month really goes a long way.
It's something small to help your fellow man.
This is true. jarofhope.org/donation. You can find it there.
And then the events that you guys do too. So what's your next one coming up? What do you have? Local.
So in terms of a local event, we don't have anything until March, but we're running the New York City Marathon November 2nd, where there's 25 of us running for the team. And then in January, we're running the Disney Dopey. Now, we just finished running the Grand to Grand. We had a team of 9 go out to the desert and run 171 miles. And the reason we do this is not to run the race, but we find that the harder the events that we do, the more people donate. They love to see us struggle, which is fine. I will go and struggle every single day for my son, as well as we're trying to bring a child in from Australia, little Joshua, who his mom, Michelle, we've got to know over the years when I ran a race in New Zealand, and then I flew to Australia and did 100 miles with the family in Australia. Was just amazing. I got to meet Joshua then, and now we want to bring him to America to get the same therapy that Jamesy's getting. It cost us some money. We need to raise about $40,000, so please go to jarofhope.org. You can donate to anybody who's running the New York City Marathon. Hopefully by then, we'd love to raise the money so we can bring him in by December. If not, January, the Disney Dopey. I'm running 4 events, the 5K, the 10K, the half, and a full 4 consecutive days so I can raise money and bring Joshua here. No expenses to the family. We're going to pay for everything for the mom and Joshua to come here, fly to Florida, visit the clinic for 2 days, get the treatment that he needs. We pay for the hotel, the airfare, food, whatever they need for their time to come here. They've got enough to worry about. They don't need to worry about anything financial. So that's why we do these things.
Wow. That's awesome.
Yeah, man. Thank you. But, I live it every day. So I know what the families are going through and the hardships. So, and we're blessed. We're just blessed. I'm blessed to know people like yourself. I'm blessed to know a ton of people like John from Adapting Social, who gives me this platform to have a voice to share this with everybody. You know, it's great.
Yeah, lucky you have nice things to say. So
I do.
a lot of people don't realize that this is not the easiest thing to do for people. You know, speaking in public is actually one of the top 3 fears.
Is that right?
So this is speaking in public.
True.
You know, because it is going out to a platform with lots of people out there. But it's actually the fear of flying, the fear of dying, and the fear of public speaking.
Wow. Those are tough, top 2.
They are, and it's funny because I being a DJ helped me with speaking in public because I kind of just had to do it.
Right.
And I had to lead people.
Right.
You know, so not everybody is very engaging and interesting to speak, you know, to hear speak.
Right. You know what? Everything's starting to fall into place now. The more and more we talk about, now that I know, you know, Matt is actually would you say the president, CEO of the H.O.P.E and Brick, and you run a great meeting every Tuesday morning, 8 a.m. at Icarus.
Yes.
You guys, if you're a business owner, you should come out. If you're in the Monmouth or Ocean County, come to Icarus, 8 a.m. or come a little earlier to meet and greet people. But Matt runs the meeting, and it's awesome.
Don't forget the important part. Make sure you bring a stack of cards because we usually have 30 plus people there.
True.
So we actually started the group about 6 months ago, and we grew to 32 members.
Fantastic.
So we call ourselves the Monarch Money Makers because it's Monmouth Ocean, right? Since we're in Brick, we're not far from Wall in Monmouth County. And money makers, what are we there to do?
Make money.
We're there to make money. So it's one person per profession, and we try to get a good group of people together and teach them how to be able to get referrals for everybody. Because like I said, it's big spoon, little spoon. The little spoon is to eat. The big spoon is to serve. Well, we have to serve. So when you have these things and speaking to people and active listening becomes a skill, just like speaking in public. I did Toastmasters for a little while, and that helped teach me how to speak, because you ever hear people say and ah a lot when they're talking?
Always.
That's a space filler. Because what happens is your brain and your mouth move at 2 different speeds.
Interesting.
Mine went a mile a minute. So I had to slow one down so this way they kind of stayed together.
Right.
And I slowed down the way that I speak because I spoke very fast because I had a lot of stuff to share with people.
Right.
So I started to speak a little slower so this way I could speak more intelligently to people and get my point across without having my space fillers.
Love it.
I love
learning a
speaking in
lot
front of-
today.
I love speaking in front of people. So now I don't care. I don't care. And the thing is, people are there, you know more than they do. So a pause is okay. And so these are just things about having, like one of the things that people get out of the group that we have is they now have to speak in front of 30 people every day or every week for their commercial.
True.
That's another thing that they get out of it. Not just getting business, but also becoming a better business person.
Right. Comfortable sharing what their business is and doing it in an articulate manner within 30 seconds or so, right? Because that's usually all the time you have to get across to somebody what it is you do and how well you do it.
Yeah.
Right.
So all these things. So the group was fun to build, and you know now it's progressing even more. And you know, like you said, if anybody is looking to do more business or just network, come on down and check us out, and just bring a bunch of cards and meet people. Everybody's always nice and fun. So.
Absolutely. I have a good time going every Tuesday morning. It's great.
We love having you there. So you fit right in.
So that's Tuesday mornings at Icarus. Come out and see Matt at the H.O.P.E group, and myself, I'm there every Tuesday morning. I love it there. And I'm sure you've gotten a lot of business from people in the group, right? And helping other people writing mortgages, like you were bringing up somebody from the group, his daughter, earlier today, right? You're helping them get a mortgage?
Yeah, a lot of people, when they're thinking about getting a house, they go online, and what they don't understand is like some of the bigger companies out there, and you know, it's kind of the one that goes up to space. You know, they're help desk people. They're behind a computer, so it's no different than if you have a laptop and you're calling the service company, and what happens? They transfer you to different people. They're in another country someplace, you know, and they have flow charts. Well, if they say this, then it goes here. Well, I work a lot differently than that. So for me, I have an initial conversation, right? What is it that you're looking to accomplish? How can I help you? Then I start asking you some questions about your details, right? What kind of work do you do? How do you get paid? Or do you get overtime? Or do you get child support? And all of these things, now I say, okay, well, here's the things I'm going to have to ask you for. So I say, all right, I'm going to send you out my link to the application. and my list of documents. I said, we can meet if you want to. We have an office in Eatontown. I said, we can meet in person, no problem, whatever you want. And I ask everyone, what's your preferred method of communication?
Right.
Do you like meeting in person? Do you want to do it on text message or whatever? And then at the next point, I have a conversation with them, a deeper one, about what their details are. You know, what are we looking to do? I had somebody who had bad credit. He made the bulk of the money, and he had money, so he's like, you know, we wanted to go buy a house. And I said, well, your credit isn't going to work because he was below even like a 580.
Ooh.
Yeah. And he was a doctor, but he didn't pay his student loans for a little while. So it turned out that his wife works as well, and they were just having a baby. And I said, well, what is it that you want to do? He said, we want to buy a place. I said, well, do you care about the location right now? I said, because you're just having a newborn. You don't probably care about the schools yet.
Right.
He's like, yeah. So I said, why don't we do this? Why don't we buy a condo, which is a lot cheaper, do it under your wife, and then in 2 years or a year, we come in, turn that into a rental, and now go and buy a new house that you want your forever house to be. And now you have another property that's actually pulling in rental income. Put as little down as possible, save it for the next house.
So you're clearly just not in it to close a loan, get a check, and move on.
No.
You're putting a plan together for them.
Yeah. Some people, I try to
fantastic.
think 2 steps ahead. What do you want ultimately to have? Do you want to have investment properties? And that's where I am different, because I'm going to ask a lot more questions up front. I say, think of me like your therapist or your attorney. The more I know, the better I can help you. So that's why I go in depth, and because I can help somebody the more that I know.
That's a great philosophy.
Yeah. And that's
And
the way
true.
I try to look at it.
And so true. Outstanding. Matt Victoria. Matt, once again, please share with everybody how they can get in touch with you.
You can find me, Matt Your Mortgage Guy, Instagram, Facebook, or you can just text me, call me, 908-296-8904. I always answer numbers I don't know. I'm in sales. It is what it is. Most people won't, but I do.
Wonderful.
Have to. So, and then that's it.
Awesome. Dude, it's been a pleasure having you. I'm Jim Raffone, the host of The H.O.P.E. Show. Again, inspired by Jamesy, powered by Adapting Social, and sponsored by All American Ford. This has been a great episode. Thank you very much for coming out.
Thanks for having me. I appreciate it.
And thank you, everybody, for watching. And please go to jarofhope.org so we can continue to bring you great content.
Pennies a day.